Well, we are seeing weakness for stocks in North America in these first couple of minutes of trading. We mentioned at 8:30 Eastern time, we got more evidence of inflation that is hard to contain, and that's going to mean higher interest rates, and that is weighed against stocks, in particular growth stocks. The S&P 500 down another 1% right now, so it's starting to get on the doorstep of a bear market. And our TSX, which had already officially corrected, that's a decline of more than 10% in yesterday's trade, not getting much love itself. In fact, it seems to be going pound for pound with the S&P 500 right now. Let's bring in Adam Johnson, founder and author of the Bullseye Brief. AJ, it's always nice to see you. Last time we couldn't get you on camera because you were in a cab, because you've been running around town talking to clients. They have questions. I have more questions. Tell us what you make of what's been going on.
Well, I'll tell you, it's not just questions right now, John. It's about fear, and it's palpable. And that fear has accelerated as markets have decelerated, and it's understandable. You look at what happened to Bitcoin overnight, down to 25,000, and I would say that's sort of the tip of the spear. But no assets are immune. You just talked about the Toronto exchange finally hitting its own down 10% mark. And, that's where people have been going for the oil exposure. It's very hard right now, John. And as I go around the city, and as you mentioned last week, I was stuck in a cab because I've been with clients. As I go around the city talking with clients, speaking with fellow money managers, with analysts, admittedly, no one really knows how far down this could go, and that's in part what we're dealing with, John. You never really know when these bottoms happen. There's some signs that we can look for that maybe there's a bottom that's starting to take shape, and I think we're starting to get there, but you never really know where it's going to stop.
Yeah, I mean, there are different flavors. I called out just before we were talking to Kriti Gupta about how you go back to 2000, you go back to 2007 in terms of that road to the floor. It was a lot longer than what we've seen, but I will remind people, at least from the S&P 500's peak, we're already almost 130 days into that. And by comparison to some other downturns, that is longer than what we've seen. And nobody knows the future. I was saying that earlier, right? And these days, it can be a little overwhelming for people because on the one hand, and this happened with you yesterday, you have like David Rosenberg, a very bearish guy generally, but you listen a little bit more right now because obviously his cautionary comments are proving to be sort of valuable. And he's saying, don't have any exposure to any of that high growth area. And then you have some of the big believers in growth. We had a director of research from ARC, which a lot of people obviously got excited about over the last couple of years, is saying these are the best buying opportunities like we've ever seen in our life. So it kind of makes your head spin sometimes.
Yeah, it does. And John, I've been very well served over the years by buying in the hole. And right now, we're in quite a hole. But, I would also say there's an argument to be made for let's just sit tight. It's very tempting to try to say, OK, right here, go buy Coinbase right now. And yet you sort of say to yourself, well, as I look at Coinbase, it's down another 15% this morning. I don't know, is it going to go down another 15% tomorrow? It will find a home. You can buy on the way down or you can buy on the way up. They're both perfectly acceptable ways to buy. Buying on the way up is probably a little bit easier on the heart and the head.
I think you were going to say something just about like the things you want to be watching for in this very jittery market going forward. So let me open the door for that. I mean, what are the signs you're watching for to try to determine? I know, to your point, it's very hard to market time, but what are some of the things you're going to be watching for?
Well, John, I call it my Are We There Yet checklist. And 6 of my 9 factors or items have been checked off. But there are 2 more that are really critical that have not been checked off. Specifically, the VIX, number 1, and the put-call ratio, number 2. The VIX is probably something everyone's familiar with, right? The volatility index, the fear index. And what you really want to see, because this is consistent with previous bottoms, you want to see, and I hate to say this, you want to see it, but you kind of do. You want to see the VIX spike to 40. When the VIX spikes to 40, that tends to be indicative of maximum fear. We're not there yet. I think this morning we're at about 35.5. Yep. We've been as high as 36.5. So 40 is the number I'm looking for. And then on the put-call ratio, that's just very simply a ratio of the number of puts being bought relative to the number of calls being bought. And historically, when that ratio goes to 1.4, meaning people are buying 1.4 times more puts than calls, they're more worried about ensuring downside than trying to position for upside potential. So you get the VIX at 40, you get put call at 1.4. Those tend to be points at which you can say, yeah, I think fear is peaking, and that's when you start to see some stability in stocks, and then eventually you see a rebound. I hate to say it, John, we're not quite there yet, but that's what I'm watching.
No, we appreciate the numbers and the data points to be watching for. AJ, thanks a lot. Good to see you.